What's going on, guys, and welcome back to another video. So in today's video we're going to look through the top 3 ETFs in my opinion. We're going to go through their average yield year on year, their top 10 holdings, their current share price, sector weightings, what an ETF actually is, and the pros and cons of choosing an ETF over individual shares. And always, if you're new around here, please consider subscribing to this channel as we're currently on 273 subscribers, so our next target is 300. So let's get right into today's video. So the first index that I believe all investors should be invested in, if you're going down the route of ETFs, would be the Vanguard S&P 500 ETF. Now you can get this in numerous currencies. So for example here, this is the London Stock Exchange one, which you can get in euro in the Amsterdam Euronext, for example. So the ticker symbol would be VUSA, and again, because this is on the London Stock Exchange, it's .L. At time of recording, the price was £49.37. And if you scroll down here, we can see a fund summary. So this fund seeks to track the performance of the index, a widely recognized benchmark of the US stock market performance that is comprised of the stocks of large US companies. So it's kind of comprises the top 500 companies in the US, as the name suggests. If you're new to investing, you might not be aware what an ETF is. So you can see here that an ETF is an exchange traded fund. An exchange traded fund is a type of investment fund, an exchange traded product. For example, they are traded on stock exchanges. ETFs are similar in many ways to mutual funds, except ETFs are bought and sold throughout the day on stock exchanges. On the ETF's 1-year chart, you can see that unlike growth stocks, for example, ETFs are very consistent, slow, steady growth. So this time last year, it was at about £45.94, whereas at time of recording, it's at £49.37. So one share of this ETF only went up £4 in the last year. And again, you might be thinking that's a very bad return, but you got to realize as well that ETFs are a lot more consistent and a lot more risk averse than, let's say, your Apples or your Teslas of the stock world. So if you're not planning on retiring anytime soon, I wouldn't advise you to put 100% of your capital into ETFs, as I said, it has a very slow kind of compounding growth over time. Whereas if you are in, let's say, your early 20s, your 30s, your 40s, that you should have, let's say, again, it's up to your own personal goals and aspirations, but in my own opinion, I would have about 20 to 30% of your overall capital in ETFs. It gives an overall benchmark then of the overall US market, which will certainly be a benefit to your overall portfolio over time. We can see here on morningstar.co.uk that the Vanguard S&P 500 on the London Stock Exchange is comprised of the following sectors and their weightings. So you can see here that the basic materials is 2.13% of the overall ETF, consumer cyclical is 11.2%, financial services is 12.86%, real estate 2.61%, communication services 11.11%, the energy sector comprises up of 2.32%, industrials is 8.32%, tech is the biggest weighting at 25.22%, consumer defensive is 7.33%, healthcare is 14.08%, and finally utilities is 2.83%. As we just saw from the weightings that the tech sector took up a quarter of the overall ETFs, it's no surprise that the top holdings of this ETF are mainly tech-based. So the top 10 holdings are Apple with a 7.26% holding, then Microsoft with 5.9%, Amazon 4.99%, Facebook Class A 2.43%, Alphabet Class C 1.67%, Class A 1.66%, Berkshire Hathaway Class B 1.46%, Johnson & Johnson 1.39%, Visa 1.24%, and intent to place Procter & Gamble with 1.18% holding. In terms of annual return on this ETF, you can see on screen that the last 7 or so years are on screen. So the price return in 2013 was 31.54%, Then in 14 it was 22.10%. In 2015, 5.72 return. 2016, 34.29%, which is impressive. 2017, 10.68. In 2018, it was minus 0.1%, which again isn't a lot. 2019, and bumped back up to 26.51%, and so far, as of the 31st of August, it is up 8.34% this year. The second ETF that I would look into buying on Trading 212 would be the Vanguard FTSE 100 UCITS ETF GBP accumulation with ticker symbol VUKG.L as it's on the London Stock Exchange, and at time of recording it was £26 a share. So some of my main reasons behind choosing this ETF would be number one, because the first ETF we covered was the S&P 500, so that covered the whole of the US market. So to help diversify, this will be in the UK market. And number two, my second reason, will be because the UK is having very bad times at the moment. Firstly, in terms of Brexit. Second, in terms of the virus, like the rest of the world as well. But I feel that their FTSE 100 is undervalued now. So you can see even last year it was up at about £31 and even went up as high as, let's say, £32 a share. It crashed down in March to £22 a share, and it's currently at about £25 a share. So I do feel that as a long-term investor, this would be a good ETF to get involved with. In terms of the FTSE's 100 weightings, it's interesting to see the contrast between the FTSE 100 and the Vanguard S&P 500. For example, here on the FTSE 100, the tech sector only brings up a measly 0.73%, whereas we saw on the S&P 500 that was up to over 25%. So again, it's good to have diversification across different ETFs, as different ETFs have different sector weightings. So the largest we have, the two largest on the FTSE 100 is the financial services sector with just under 16%. And then actually we have the consumer defensive as well with just under 20%. And then thirdly, we have the healthcare sector with 14% of the holdings. So again, like the S&P 500, it's quite contrasting the way they have them weighted out, which is a good thing when you're diversifying across a few ETFs and a few different markets and exchanges across the world. I also find it quite interesting that because I'm predominantly invested in the US market, that you would kind of tend to forget about a lot of other markets, such as my home market, which is the Irish Stock Exchange, and the London Stock Exchange, which is in the UK. So for example, some of these top 10 companies I honestly haven't even heard of. And even the top one here, AstraZeneca PLC, is the top holding with 7.33% holding in the FTSE 100. And honestly, I actually haven't heard of that company. Same with the second company, GlaxoSmithKline, holds up a 5.33% holding. In third position is HSBC Bank. Fourth is British American Tobacco with 4.74%. Fifth is Diageo with a 4.19%. Then we have BP, Royal Dutch Shell, Rio Tinto, Unilever, and 10th position Royal Dutch Shell PLC B with a 2.99% holding. Again, as mentioned at the beginning of this ETF, that it's currently down 11.81% on its 1 year daily total return, which is quite high, to be honest, for such an established ETF that is diversified. But again, this also offers opportunities, as I also stated, that I feel that it is undervalued, and given a few years, once Brexit starts to settle down and once the economy goes back to normal due to the virus, I really feel that this ETF will start taking off again, and there would be a good opportunity to buy on the dip. And the third ETF that I would be looking into would be the Vanguard FTSE Emerging Markets UCITS ETF USD distribution, ticker symbol VFEM.L, because it's on the London Stock Exchange. And again, like the other ETFs mentioned, you can get these in numerous currencies. So example, you could get this in the Euro form on the Amsterdam Euronext, for example. And also, if I had to pick a fourth ETF, it would be your own home market. But because I live in Ireland, which would be the Isaac Index, there's not a whole lot going on in it because it's such a small market. It might have one or two big enough companies such as Flutter Entertainment, which would be a betting company, But besides that, it's mainly kind of predominantly banks, which weren't doing well over the last few years, and holdings such as Ryanair. So there's not a whole lot going on there, and it's not really liquid. So I tend to stay away from that market as it's quite slow. So the markets I would be interested in would be the S&P 500, which is the US. Then in second place would be the FTSE 100, which is the UK market. And then just to completely diversify yourself as well, you could have the third ETF, as I mentioned here, which is the emerging markets. So at time of recording, the share price was £45.04. Because the emerging markets would be more volatile than, let's say, the US or the UK markets, you could see there's quite a lot more swings in terms of ups and downs on the 1 year chart. So this time last year, it was at about £49 a share, it then dropped drastically down to about £38 a share in the middle of March, followed by an upward trajectory and up to about £58 a share. Then it dropped again and is currently up at around £57 a share. With this ETF, you can see that the top holdings would be in the financial services with 19.7% holding. We would then have consumer cyclical with 17.93%, and then kind of the third largest holding would be in the communication services with 14.54%. The performance overview shows that this ETF has a 6.42% 1 year daily return, which is still impressive enough, but you would think that being a more volatile stock that the percentages would be higher because there's a bit more risk because it's in the emerging markets. And finally, just to look on Investopedia, the advantages and disadvantages of ETFs in brief. So the advantages would be obviously it would offer more diversification, it trades like a stock, there's lower fees, there's an immediately reinvested dividends, limited CGT, there's lower discounted premium and price. Disadvantages, again, I know in advantages it said there's diversification, but in terms of some ETFs there's less diversification, as a lot of time to be limited to large cap stocks. There's intraday pricing might be overkill, the costs could be higher, there's lower dividend yields, the leverage ETF returns are skewed. So with all that being said, that brings the end to today's video. We went through the 3 ETFs that I will be looking into in my own portfolio, which be the Vanguard S&P 500, which tracks the US market, the FTSE 100, which tracks the UK market, and then we had the overall FTSE emerging markets. So that would give a really diversified look across all aspects. And again, if you had to pick a fourth ETF, you should kind of pick your own home market as well, as you'll know a lot more about your own home market than you would, let's say, foreign markets. So with that being said, guys, thanks very much for watching. If you have any questions or suggestions, please comment below. And again, if you're new around here, please consider subscribing to this channel, as it would really help the channel out in the long term. See you guys in the next video.